Hey guys, it's James and we're back with another valuation video. Today we are going to be looking at Procter & Gamble, or PG. PG currently has a PE ratio of 26.11 and they have a dividend growth of 66 years in a row. So what is Procter & Gamble? Just a real quick snapshot of what they do. Here's their website. A lot of common brand names, but you scroll down, their tagline is products that make life a little easier. So taking a look at some of their separate brands, they are in different lines of work here: baby care, fabric care, family care, feminine care, grooming, hair care, home, oral, personal, and skin. Some of these very common names that you see at the store on a daily basis. So what are we going to do with Procter & Gamble? We are going to run it through the discounted cash flow model, Graham's model, and the dividend discount model, come out with a valuation, average these valuations, apply a margin of safety, usually around 20 to 25%, come to a final valuation, and then that will trigger if we are going to have a buy or sell for Procter & Gamble. So for the discounted cash flow model, we have to find the free cash flow numbers, apply a perpetual growth rate and discount rate, and then apply or put in their cash and debt numbers, and then come out with a final valuation for discounted cash flow. So first off, if you want to follow along with this spreadsheet, you can download this spreadsheet over on Patreon and follow along. So where are we getting these free cash flow numbers? Well, over here on macro trends, for Procter & Gamble, cash flow numbers are in billions. So come down here, and from 2012 all the way to 2021, the most recent full year of numbers, 15.62. We're going to take this 10-year running numbers and evaluate Procter & Gamble. Okay, now that we have the 10 years of free cash flows in the calculator, we're going to have to determine a perpetual growth rate, and that is typically anywhere from about 0.5% all the way to 2.5%, where the average growth rate of the entire United States economy is around 3% per year. So we're going to go ahead and choose 1.5% for Procter & Gamble. Now the discount rate is typically where it's going to be around 8%. Now we got to get the cash and debt numbers, and we do that by going over to Seeking Alpha. On Seeking Alpha's page for Procter & Gamble, go over to the valuation tab, and on the bottom they have total debt and cash numbers. So we'll go ahead and put 33 billion and 6.71 billion in for the debt and cash numbers. And now that we have that on in our calculator, the discounted cash flow model is giving us a valuation of $122 with Procter & Gamble's current price of $150. Let's go over to the Graham's model. So for Graham's model, the expected growth rate from the analysts is about 5%. So this growth rate number here, it is the expected 5 to 10 year growth rate per year, and analysts are expecting it to be about 5% per year for Procter & Gamble over the next 5 to 10 years. Now the AAA corporate bond rate, you can find that by a quick Google. AAA corporate bond rate 4.5%, the most recent figure. So we'll go ahead and put 4.5% in for the corporate bond rate, and that gives us a valuation of $67.70. Now coming to the dividend discount model, and my prediction is that this is going to give us the highest valuation, as we do know that Procter & Gamble has been paying a dividend for 66 years. So this valuation is probably going to be the most suited for a stock like Procter & Gamble. So where are we going to find the dividend payout in the 5-year dividend growth rate? Coming over Procter & Gamble's page for dividends, and it's the sub-tab dividend scorecard. Coming down here, they have a lot of good information. The annual payout is around $3.65. That's about how much you could expect in annual dividends, with a 2.43% yield. And then the 5-year growth rate, we're going to need that, 5.68%. So $3.65 and 5.68%. Now we come to the risk-free rate. What is the 10-year bond yield? The 10-year bond yield is about 3.5%. Putting in 3.5%, the return of the market over the course of the next 10 years, we're going to go ahead and put in 11%. Now the dividend discount model can get a little fuzzy if you put in the wrong numbers. You do have to know how to, it can turn this valuation negative. You do have to understand what the dividend discount model is telling you. 3.5% meaning the risk-free rate, meaning if you were to put your money somewhere else in a bond yield, at the minimum you'd be getting 3.5% on your money. So with that being said, coming over here, if we go ahead and click go, it does tell us that Procter & Gamble with a margin of safety of 25% is a sell. So with a margin of safety, that gives us a final valuation of about $128. If you feel safe, if you have a longer investing time horizon, you can choose any maybe a 15% if you feel comfortable. If you have a 30-year time horizon, you could probably even choose 10%. Let's say 15%. Personally, for myself, I feel comfortable with 15%. So let's go ahead and take this number, come over to our watch list, $146.09 for Procter & Gamble, $146.09, evaluated today, December 3rd, 2022. So with that, hopefully you enjoyed the video, and thanks for watching.